Welcome back to Real Estate Economics Weekly webinar series covering this week product identification for land acquisition opportunities, and we're using the Clovis, California market area for our case study today. This is part 2 of 2, so if you're interested in seeing all 3 parts, make sure you view them all. In section 1 we covered current conditions on the ground. So here in section 2 we're going to move on to study just specifically the new home market. This particular exhibit shows market trends in Clovis, California only, coming from our real estate economics repeated surveys of this particular market area. We've accumulated quarter after quarter of sequential data that we can bring to the decision-making process here. If you look in the top line, the number of active developments has come down a little bit from 25 a year ago to 20. That's still a fair number of communities for a market area of this size, particularly if you consider that Clovis is surrounded on 2 sides by other markets that would be in the city of Fresno MSA. If you look at the prices in the second blue line down, we've had some degradation obviously from 2008 to 2009. That's continued into 2010, so we doubt this particular market area has reached a price base or trough, if you will. That will be important as we formulate our programs to make sure that we price those to account for probably what's a little bit of price degradation that will take place over the next year. See incentives as a percentage of base price. Those came down quite a bit from 08 to 09, but those have rebounded a little bit. We expect some incentives to be part of this market area and most others regionally for several quarters to come. We recognize that we probably borrowed some sales, if you will, from the future due to the federal tax credit. So there is a payback to take place there. We're already experiencing that, and that may continue a couple of quarters. Down to the middle of the page, if you see the market area monthly sales rates, those numbers have been pretty consistent the last 3 years, although the numbers are small. But again, I think we're going to degrade here from 40 sales a month, probably to something less through the back half of 2010, again due to the federal tax credits and just really the slow progress, if any, that we're making on unemployment. If you look at months of total unsold released inventory, we're down from 14 months to 11 months to 6.6 months. 6.6 months is really not where we'd like to be quite yet. We see many market areas within the state and some of the more vibrant areas, some of the coastal areas, where it's 1 or 2 months, and the community counts have really come down quite a bit too. That's yet to occur in this particular market area. This is the current list of currently active communities. If you notice here, there's 16 communities. On the previous page, we showed 20 active communities. That tells us that there are 4 developments in this particular market area that are on hold or closed for infeasibility or poor sales, whatever reason. As part of our survey methodology, we would track a community through to its very last close, the last close of its zoned unit. So we know that there are 4 developments out here that come back to the market at any time that they could reestablish feasibility. Shown in blue are 3 of the 16 communities are just about sold out and are probably going to exit the market in the next quarter or 2. There are another 3 or 4 communities where all units are released, but we'll probably need 2 or 3 quarters to remove them from the competitive environment. So what we have here is this number of sales gradually channeling into fewer and fewer communities. That's going to improve capture for everyone, we would think, but more specifically, it will greatly improve capture for those products and programs that are better aligned with market in terms of price and size range. If you look at the bottom of the page in blue, the weighted average sales price, $296, is almost a full $40,000 below the market averages. That tells us that there are a number of legacy communities out here with executive product and different products that are not resonating with buyers, and buyers are moving into somewhat lower price ranges for their sales. Let's dig into this market a little bit more. We've got the floor plan distribution by price range. Shown at the left side of the page in the blue is the number of floor plans in each of these given price ranges. The biggest number is really 10 floor plans that shows up at the 300 to 325, 325 to 350, and then again 400 to 500, and that would be 12.3% of the total market floor plans for each of those price brackets. That's not a huge number. If you start to divide those 10 floor plans by lot size, school district, 1 and 2 story, parking counts, bedroom counts, and the different features, that's not an extraordinarily high competitive level in those price ranges, which are really bread and butter price ranges for this market. Shown in yellow at the center of the screen, I've highlighted the most high selling price brackets, again, all that are performing at more than half a sale per month. But as soon as you go up to a higher price point, 350 to 375 in this particular case, sales drop way off, and then if you continue up higher, you're into just very, very slow sales that are probably unsustainable, particularly if you've borrowed money or financed your development in any way. Shown in green are the high efficiency sales categories that we already established by sales rates, and you can see the value ratios for these communities. Again, 140 up to the upper 150s. It's really where the product needs to be for buyers to respond. Here's the floor plan distribution by unit size, and this is living area for the homes. Again, you can see on the left hand side of the screen that the number of floor plans in each of these brackets is shown. Showing about the same result. 12.3 is the most concentration in any particular size bracket, and that's 1750 to 1999, 2000 to 2499, and 2500 to 2749. Again, real bread and butter unit size ranges for this particular market area. Good sales, and again, consistent value ratios from our last exhibit. Let's take that one step further and look at the bed and bath count distribution, and things change entirely. We have 21% in the 3-bedroom, 2-bath. That's 26% of the entire market. That's a pretty big number. Another 26 falls into the 4-bedroom, 3-bath price range. Those two are not highlighted and are not particularly classified as high efficiency layouts or configurations. The high efficiencies are coming in the smaller houses. You can see in the dotted numbers 2 bedrooms, which we recognize are in attached programs that really are outside of our discussion today. But there's also very low community counts or floor plan counts, I should say, in the 4-bedroom, 2-bath. That's a real bread and butter configuration for single-story homes. 4-bedroom, 2.5 baths. There's some evidence that this market would like 4 bedrooms or is willing to pay a little bit more for a 4-bedroom. And there's also not much at 3 bedrooms, 2.5 baths, suggesting to us that there may be some opportunities in compact lot sizes and smaller homes, affordable homes with 3 bedrooms, 2.5 baths. So what do we know now? We know the community counts remain elevated, but they are declining, and we're starting to see some sellout of active communities. Less than 20% have released their entire inventory, but 3 are almost gone. And if you take another 20% out over the next 6 to 9 months, that's how much time it would take to process and get a new community up and running anyway. So out 12 months, 9 to 12 months, maybe 15 months, the competitive environment should be much cleaner. Floor plan counts and competitive levels are high in some of the size ranges that match up to this market's financial capabilities. We recognize, though, that we're going to have to provide compelling value ratios in this market to generate sales anyway, so that's not that big of a surprise. Best opportunities appear to be in some select room configurations, and if we can provide those at the right price point, we should have some opportunities to pick up some market share. Market opportunities based on the room count analysis and the market efficiencies in terms of size range and price range appear to lie in compact lot detached programs and also some highly affordable price points in conventional lot sizes. That's part 2 of 3. Please view all 3 parts today.